Good morning, everybody. Welcome to the Flow Show, Tuesday, 17th of June. And nice sunny day here in the UK. And I'd love to say things are a bit brighter in markets. I'm not sure that's the case. We shall find out. Morning, Kay. How are you doing?
Morning, Ryan. Morning, everybody. Yep, doing all right, mate. Perhaps we should call it a day and go to the beach. It's all quiet.
Yeah, absolutely. Absolutely. I could do with a trip to the beach right this moment. Maybe I'll do tomorrow's Flow Show on the beach if the internet's any good.
Oh, yeah, why not?
Yeah, take me whole rig down there on a beach towel. Right, let's get cracking. Lots going on. Going to start with the Bank of Japan first. They held rates at 0.5% as expected. They cut their JGB purchases from Q3 as expected. They're going to be trimmed by 200 billion per quarter starting April 2026. Bond holdings are expected to fall by 16 to 17% by March 2027. They will gradually reduce JGB purchase amount in a predictable manner. They say long-term rates are to be formed by financial markets, but they're ready to act on any yield spikes. Bank of Japan Governor Ueda says they will conduct a mid-term assessment on the bond plan next June. It says there's no change to our stance that bond tapering should not be used as a monetary policy tool. And they said they will respond nimbly in the case of rapid rise in long-term interest rates, such as by increasing bond buying or conducting fixed-rate bond purchase operations or using fund supply operations against pooled collateral. Lots of technical jargon going in there. Speaking about the economy in general and what's going on over there, no real change to the sentiment statement or lines from there. Price trend is to slowly keep accelerating. And he said there's no big change to the overall picture of Japan's economy or prices from the last monetary policy meeting. So, okay, bit of a dead duck in the end. Everyone got what they wanted or was what they were expecting. We're no near a hike, and the bond taper wasn't a monetary policy move, as we said.
Yep, exactly. So, yeah, it kind of only gave half to the market at first because the bond tapering, buying tapering reduction only starts from Q1, which is Q1 fiscal year, in my opinion, 2026. So that was perhaps a bit of a not giving the market everything, but then immediately adding in the statement that they are ready to buy and scheduled bonds in the meantime, and that puts it all back to neutral and the cautious approach as we've been talking about, and that is where we are. And the market had exactly the reaction that it that may have been expected and should have, which is virtually zero. Yesterday, I said it was going to be extraordinary that dollar yen would only have 30 or 40 pips range, but that's exactly what we got actually. We only got like 40, call it 50 pips, come on, a range on after the Bank of Japan.
Yeah, no big move at all for that. And yeah, no surprise that we hit that 145 zone and it held into the BOJ. And then we dipped from it and we held it again now. We're just having a little test of the lower end of that. So still looking intraday short-term bullish-ish, but yeah, it's still faffing around for me. So we're going to be driven by the rest of the headlines and whatever else is going on in the world, I think, today. Germany, we had the zoo report out just 30 minutes or so ago, if I can find it. There we go. Things are a little less crappy currently in Germany, minus 72 from a prior minus 82. Expectations went up, though, to 47.5 from 34.8 expected and 25.2 prior. And also the Eurozone number went up as well, 35.3 for expectations, this number, versus 11.6 previously, so over doubling. So sentiment, again, another sentiment survey showing that things might be getting a little bit better or less crap than they were, but still a big negative number there for current conditions. A bit of data from yesterday, not a lot out anywhere. In the US, we had the Empire manufacturing numbers, which came in a little bit rubbish at -16. This one has been a little bit all over the place. It was expected to improve slightly. It came in worse. Prices paid, that fell to 46.8 from 59. New orders doing a lot of damage, coming in -14.2 versus a +7 previously. 6 months expectations, though, jumped to 21.2 from -2 previously. So a little bit all over the place there, but maybe some people seeing a bit of positivity in the future, not so much right now. This Iran stuff has still been going on. We had a whole range of headlines and emotions yesterday. We had sources pieces saying that Iran is ready to abandon enrichment but wants a face-saving exit from this. That was the first thing that sort of got risk raying a little bit yesterday morning. And then we had the Wall Street Journal following up, which pretty much of the same, calling it an exclusive, but it sounded a lot like the prior story. That all got denied, obviously, later on, and things gradually took a sour turn the longer it went on. Russia's obviously been speaking up as well, saying that Iran is acting within its right to self-defense. Trump said that at one point during his G7 shindig that a deal is likely or something will happen after the G7, that Iran wants to make a deal. But then he's just popped up saying that he's not too much in the mood to negotiate with Iran. So a bit of back and forth there. They've been kicking off and lobbing more stuff at each other as time goes on. Iran, as I say, denying that they've made any secret approaches to try and get a deal done, but we don't know what happens underneath the table. A lot of trade stuff going on at this deal. We've had Handelsblatt reporting that the EU Commission was prepared to accept a flat rate US tariff or 10% under clear conditions. With negotiators hoping that a flat tariff will avert higher US duties on cars, pharma, and microelectronics. It says that America has not yet agreed to limit their car tariffs against the EU to 10%. And if the US waives higher car tariffs, the EU will lower its import tariffs on US vehicles and recognise certain American product standards in future. That was Handelsblatt. Then Politico said the EU denies it will yield to Trump's 10% tariff base. So one story on one hand, denial on the other hand. We finally got pen to paper on a deal, go UK, because Trump and Starmer signed a trade pact document at the G7. So, well, I don't know if that's the final thing, but it's a trade pact document. We got something signed, possibly the first deal we've got out of all this lot. Japan's Shiba met with Trump and urged him to rethink tariffs, then came away saying that there's no trade package yet and that talks are ongoing with the US. The Canadian minister in charge of US trade says not there yet on an economic deal with the US, but is confident Canada is making progress. PM Carney said that he and Trump agreed to launch talks on new economic and security deal within 30 days. So everyone's jumping around. The probably the most interesting thing to come out the G7 was Mr. Macron coming out because Trump left the meeting early to apparently attend something serious in the US. So he left the G7 early. Macron came out, says his departure is a positive sign given that he's working on a ceasefire objective between Iran and Israel, to which Trump came out saying that a publicity-seeking Macron was wide of the mark. He didn't leave because of that, whether purposely or not. Emmanuel always gets it wrong. So he gave him a big, good, proper dressing down, which cheered me up first thing this morning when I read it. On deals, Trump said the EU is not yet offering a fair deal. He says there's a chance of a Japanese deal, but they're tough, although he had a terrific conversation with them on trade. He says farmer tariffs are coming soon, very soon, and he's still ready to send his letters out regarding tariffs. So we're 17th of June, just under a month until the next deadline, and these things are ongoing. Apart from that, and a 10 million Iran-Israel headlines, not a lot else in the news. Kay, anything you want to pick out of those bones?
No, the only thing is with the UK US trade is that it didn't resolve anything surrounding steel, right? And that is perhaps something that we should just keep in the back of our mind also, or but the rest. Sorry, I don't think the meeting between Ishiba and Trump was one to sign a deal anyway, because Akazawa is still negotiating, and I guess those meetings will pick up again once the G7 is done. But yeah, the rest, no, I think we covered pretty much everything.
Yeah, absolutely. And maybe a bit of surprise that there wasn't even an inch given in those trade talks with Japan. There still seems to be, still at loggerheads, no forward steps at all on that. Probably why we saw the yen weakening a little bit before the BOJ. But yeah, no deals as yet with Japan.
Yeah, quite surprising.
Yeah. Sorry, mate?
I still find it very surprising that they haven't reached a deal, because they strategically Japan is probably the best US ally. I mean, and the best one they can imagine, even because they want to invest in the US.
Yeah, it is a bit of a strange one. I think if Abe had still been there, we would have had a deal months ago, and that would have been done and dusted. But he's not, and we've got to deal with what's on the table at the moment. Right, we got a fairly quiet day on the data wise, particularly in Europe, but things are going to pick up when we get to the US session, because we get retail sales out of the US, as well as some import-export price data as well. So that's going to be watched closely ahead of obviously the Fed on Wednesday, Fed tomorrow. Then a bit later we get some industrial production numbers there. So we get some good old US data, hard data to get our teeth stuck into and see what markets want to do with that. Regarding the Fed, probably not a lot, but should bring some moves either way. Right, let's get straight into the prices. It might be a quick flow show today, given there's not a lot to talk about. So dollar yen, we've touched upon quickly there. This 144.90, 145.10 zone doing the job at the moment. Break there, 145.50, and then up into this 146s area is going to be the watch points for that. See if we continue in this range, or whether we're going to have a little bit of a push out and maybe go for a wander up towards 147, maybe even higher. Still wandering on this trend line. Keeping below this level, it keeps the 144 in play. Just keep an eye on that prior or the day's low, 144.40s. There's a bit of an intraday marker. Otherwise, it's 143 and then down towards this trend line, which has stepped up to this next other line here, 143, 44, 45. So it's been walking this line quite a bit recently with the odd blip underneath it. Obviously, we've still got this risk headlines going on. So any news either side, we had a lot of more risk on headlines yesterday. Saw stocks rallying, and as I say, that sort of got blown out the water overnight. We saw a bit of a risk reversal. Derej, you want to have a look at Guppy? Yeah, I'll leave that one to Mr. K. Going to have a look at Aussie dollar.
While you are on the yen,
yeah,
and just thinking about the next 36, call it, hours of data, and with the FOMC on the back of it. Doesn't it feel like dollar yen wants to push through? I've got the impression that globally the market may be in a waiting mode now, see what comes out of the data first, and then going to the FOMC, which should be in theory, a no-brainer. But since the Bank of Japan is holding still right now, there's still quite a bit of interest rate divergence there, and we've also seen those yen crosses being relatively big. Doesn't it feel like we could push through a little bit unless we get, of course, crappy data out of the US, the usual caveat. But it does feel like to me like those yen pairs may want to push through before we get into the FOMC.
Yeah, I mean, as I say, we're creeping up here, and even just the last, since Friday, we're finding higher lows, higher highs. We're just pushing up. Yeah, it looks like we keep coming back to this area. So yeah, I would not be surprised if we see a push up through that. Whether that's a risk headline driven or whatever. Depends what the Yanks want to do with this one, I suppose. If they come in and think, oh right, we're going to need to buy some dollars, then we'll be going up again. But yeah, I think you're right. But it's not like you say, the euro yen that's holding up. So even if we see dollar yen going through, is it more likely to be a yen move than a dollar move? Because euro dollar, it's pulled back from this 116 test, but it's not exactly falling off out of bed. So I think there's a mix of two things going on: what's going on in the yen and what's going on in the dollar. And whatever side's going to be leading that should be direction. But on the flip side, if dollar yen's breaking up through there, can you see euro dollar pulling back too far?
No, because I think it may indeed be a yen thing. And that's why I'm thinking about it could perhaps just push through. My overall feeling is that we may be in ranges until of the data, and then until FOMC tomorrow. Because is there really a fresh reason to sell dollars, for instance, where the market is already relatively positioned? Perhaps, is there really a reason to sell additional dollars before we know about the FOMC? We could be just in a wait and see zone, and that may, in fact, unless the data are really bad, that may, in fact, not push the dollar really up, but keep everything a bit in a range, see a little bit more of retracement, corrective activity in the dollar, and then wait for the FOMC and pick it up again afterwards. And that's where I think the next, unless we get a deal, of course, but between the US and Japan. But that's where I think the next 30 hours or so may be a bit dangerous for yen longs, because we could push through, and why not? Help by the yen crosses, see a bit of a move up to 146, because it's still going to be the main instrument, right? The dollar yen, everything goes through the dollar yen, because everybody is really watching that. And I'm just saying, I'm not saying it's going to happen. I'm just saying I would not be surprised to see this kind of move.
Yeah, absolutely. And it could also just be waiting to get over the FOMC hump, make sure there's no surprises, and then it's going to go on its merry way. That's what markets tend to do. They can sometimes just take their foot off the gas going in. It's worth probably then having a look at what yields are doing to see if we're matching that in dollar yen. Yes and no.
No. No.
It's not having as big a, mind you, yields aren't doing much anyway at the moment. The last day or two, for once we're sitting in a tight 20 basis point range, which you could say, well, the dollar yen's not doing that much either. But yeah, always keep an eye on this one, US 10s, particularly when we get to the US session, because if that's creeping up and going back above the 4.5% mark, then dollar yen is probably going with it, and as will the other yen crosses as well. Where was I going to? I was going to Aussie dollar, wasn't I? Aussie dollar still waiting to make this break. We are knocking out this 35 area more frequently now. But yesterday we had that run up to the 50s into that fib, held it. I think we got to 51, 52 maybe, before the pullback. The pullback wasn't very deep, just down to figure, 65s, and then we're back up here again. So price action wise, again, probably like what Kay's saying with dollar yen, it's looking like it wants to go. Now, whether it goes with a bit of gusto or whether we just get a fake out and then we go back into the noise remains to be seen, or whether we don't break at all, which will lead to a steeper pullback. So there's three possibilities for this one. I'm still a little bit long and I'm still running a buy stop up above this fib. So I'm looking for a bit more of a volatile break because we've been banging up here for quite some time now. And every time someone sells it up here, the stops probably get bigger above there. So we could see a bit of a blow through when it happens. That's what I'll be looking for anyway. But I've been wrong before and been messed around with these moves before as well. Stocks, we had that first headline yesterday about the possibility of Iran looking for a way out. So I had a little jump in at stocks around 60.15, got a little bit of a run up on the rest of the news, and yeah, now it's petered out a little bit. This one keeps grinding. So any more risk on headlines today, then we're probably going to be heading up further and probably going through some of these highs, or at least testing some of these highs here. But this did get a bit of a knock overnight, as I said. Those reports of Iran looking for a backdoor out being denied, and they're still going hell for leather. So we're not out the woods with this risk stuff going on right now. If we can hold this 6K area, it'll give it a bit of springboard, but I'm not giving it much room under 59.90 on my long anyway. I don't know where to go next. Come on, guys. Derej, you want to look at your guppy, but I'll let Kay look at that one because he's probably got a bit more. I might just punch it over to you, mate.
Yeah, I mean, being in those kind of ranges that we are, the yen crosses are obviously bid, but being in those ranges that we are now, again, I'm going to repeat what I said just a bit earlier. I think we could be actually in a bit of a range for globally on most of instruments, unless we get like big headlines. But yeah, it seems like this yen. Perhaps it was just waiting for the bank to be over the Bank of Japan hump, and we are not going to do much with the yen right now. But we see the yen crosses are indeed globally pushing higher. The euro yen is also at a very interesting level there. We could see a bit of a move higher here. It does look like most of the yen crosses are looking pretty bid right now. So yes, we are in that resistance area that we have been looking at. I think was it last week or so, and now if you look at the next one here, which will be that big move that we saw July August last year, the 61.8 comes in at 197 and a half ish. That would be your next little level to watch, which is also, if you look back, not too far from there, a bit of tops coming in. Whoops. A bit of tops coming in too, but it does look bullish right now, and a confirmation through all those little tops here would really see it trade a bit higher here. Obviously, we can say the same thing for the top side. We have been trying it and then all the time coming back, but is there a real reason right now for coming back lower? I would argue not so much. US, UK signing half a deal. It could just be that we drift higher unless we get like worse data somewhere, which would put a bit of risk on in the market. That those risk moves that we saw overnight as well are mainly driven by what's potentially happening in the Strait of Hormuz. There was those three ships on fire, but that's just a result, okay, in between brackets, just the result of a collision rather than anything more serious. But we did see a bit of an upside upside and then downside and then back up move. But yeah, I mean, this is clearly the area to watch there is. And if you look at euro yen, we're right there too. I was looking at that yesterday. You had that July August move in the euro yen, and the 61.8 is also exactly where we trade right now. So that tells me that most of those yen pairs are still trading relatively bit. I have not really updated all the rest of the yen pairs, but you can see that Kiwi yen is also pushing up. So it's really a bit of a yen move going on there, and that's why I reckon dollar yen may. I have a different look than Ryan, but we're still looking both of us around maybe that 146 or so. But it could be that we like gradually push through. 145.30 is going to be a bit of a level there on the dollar yen. If that goes, we could push higher. But I think now we need to wait for what the US data are going to tell us. And in the advent of the data, all those crosses, all those pairs are just trading in the middle. Yesterday we had a bit of an attempt above 116 again. That was enough for the euro as well. And I think we are now getting into the slowly, like you've got the US data and then the finality of everything before the Juneteenth holiday is going to be the FOMC tomorrow. I can see us range until then. Okay. People have different levels here, just below 115 as well, around 114.60, 114.50. But I still think that 115, we've seen that quick spike below on last Friday, and then we bounced again. 115, 116, 116, 15.30 perhaps. I doubt that there is, unless we see big divergence on the data, I doubt that there is ahead of FOMC much to do, barring as well new geopolitical headlines. But seems like the market has done kind of what it wants to do, be kind of happy enough where it is at right now in a lot of pairs. And then we move into the US data. So everything looks pretty much the same with different sensitivity perhaps, but cable as well. We had that look above 136 also was a bit too much. That one is looking a little weaker as we can see, and we spoke about it yesterday as well. That euro sterling is finding bids on dips, and that's also interesting. So that's keeping the sterling a bit more under pressure, perhaps. This trend line is a bit steep for my liking, and when with steep trend lines, I'm not really a big fan of them. So I'm going to have a look at what happens. I think 135.15 again. If that goes, we could see a bit of a deeper retracement. I'm not going to exclude it because, sorry, as I said ahead of the FOMC, people may think a little bit about their dollar positions, just manage their dollar books a little, and we see a bit of a dollar which is a bit better bid. And well, actually, as we are speaking about it, we see those pairs, all those pairs, coming back a little bit. I'm just going to look at the last one, and that's the dollar CAD. I think the dollar CAD yesterday found that bid because also the dollar found a little bit a bit of a better bid after being sold again, and oils were coming back down. I do think that I do think that the global picture is still looking very bearish on the dollar CAD. That 136.80, 137.20 is really a big break that we saw. But in the meantime, again, with everything else, with the dollar, the consideration of we may see just that little bit of a dollar retracement consolidation, I would not be surprised if we get a little move back to 136, 136.10 or so, maybe even get a few stops out of the way, and then start to resume what we were doing before. Because the medium term is still bearish. The short term, for as long as we are below 136.10.15, is also still bearish. So this is just a bit of consolidation on the dollar CAD. I am still looking for the dollar CAD to move into this 134 zone before we reconsider the positions. Then we will see where we are at. So that is providing that we stay medium term under that level here. And for the rest today, I have very little to say. Yesterday, I told you about positioning, perhaps in gold being a bit pushy, and that's exactly what we are seeing now. We're coming to rest into this support zone in gold, and again, I would not be surprised that we see a bit more consolidation globally in the dollar, and we are seeing a bit more of a yeah, a bit more retracement, like I would say in gold, somewhere maybe 33.30s, 33.20s or so. Obviously, if we start to get back above 34.20, 34.5, then we're probably on our way to new all-time highs, and something bad is happening in the world, I would say. Silver is holding better, and I said it already. I think silver is now starting to look a bit better than gold, and it is. Short-term triangle right above, but we need confirmation above 36, 80, 90. My overall picture hasn't changed for as long as we are above 35. I think there is a fair chance that sooner or later we are going to hit those 40 levels. Obviously, 35 is relatively speaking a lot closer. So allow for whatever to happen here, and then perhaps push higher later. But I'm still kind of positioned for such a move happening. And with that, Ryan, back over to you, mate.
Thank you very much, sir. Well, I'm sorry, boys and girls, that we haven't got an awful lot to talk about today, but that's markets for you. Sometimes we have a busy one, sometimes we have a quiet one. But there's still moves, still levels to watch, and you just got to pick your points and go ahead and trade. Thank you very much, K-Man, for your stuff as usual. Thank you, boys and girls, for coming to the Flow Show. Have a great day, and we'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.